Well, Simon Ballard, senior credit strategist to RBC Capital Markets, joins me now to assess the fallout. Simon, thanks for coming in to talk about this. There really has been quite a lot of fallout. Yesterday, people really couldn't get their heads around what on earth was going on. What was the thinking behind it? Are we any clearer?
I don't think we really know. I think, Angela Merkel obviously had this huge, great idea that, banning short selling was going to stop the crisis across the euro and possibly help her politically in terms of getting approval for Germany's contribution.
She's got a whole problem going on.
She's got a whole problem. That's a separate issue. She needs to find some government support for the German package or the German contribution towards the package. So whether that was going to be helped, bash the bankers a little bit more. But the fact that she went out unilaterally rather than multilaterally, went out alone, it just raised speculation. It created a huge spike in volatility. Spreads went wider. The uncertainty was huge, and it did nothing to address the underlying issues. All it did was move short selling potentially from Frankfurt through to London or New York or wherever else you want to do it.
Indeed. Do you think things feel a bit calmer this morning?
They're definitely much calmer. Spreads have come back in from the wides. We're still sort of wide versus where we were, say, a couple of weeks ago. The nervousness is still there. The primary markets on the corporate bond side are still paralysed to a certain extent. We're unlikely to see much activity there for the foreseeable future until we start to see some clarity and stability. But yeah, it's a slightly better tone this morning, but no great flow in either direction so far.
Now, of course, Angela Merkel was kind of saying, look, I'm stepping out, I'm leading the way, please follow. No one appears to be following. Is the thought that this is going to be a kind of a lone voice?
Well, now Gordon Brown's gone, she's sort of taking on the Wonder Woman mantle, I suppose. But no, I think the fact that the French have come out and the other nations have come out to say that this isn't the way forward. At the end of the day, as I said, the underlying issues are one of structural reform that we need across the Eurozone. Austerity packages don't grab votes. Short-selling headlines probably do for her, but at the end of the day, you've got to be careful what you wish for, and the volatility that she's created over the last over the last 24 hours has been extreme. Although obviously it's put pressure on the euro, which, from a growth perspective in Germany, perhaps there is a silver lining in terms of their manufacturing base, etc., going forward. Indeed.
But looking at the wider picture here, we were getting reports a week or so ago over that $1 trillion package about Nicolas Sarkozy having a big dispute with Angela Merkel, banging his fist on the table, threatening to take France out of the euro. Those are unsubstantiated reports, but interestingly, they were never denied by France. Are we seeing a picture here where the main players in Europe are drifting apart a little bit?
I think it's going to be a very difficult period that they have to go through in terms of working in a coordinated fashion. You're talking, as you say, about $1 trillion, 750 billion euros, and at the end of the day, you've got to finance that. Of course, it's going to create emotional, fiscal and monetary issues, going down the road as to how we address that if and when it's called. So yes, you're going to see, but I think, the cohesion of the euro is still there. People talking about a breakdown of the euro, Germany pulling out, Greece being pushed out, I think is way ahead of the curve here. As I've said before, once you're in the euro, you're probably in the euro. But yes, it's going to be a very noisy time.
You say it's ahead of the curve. Are you saying that it's never going to happen? This is just not the way that this crisis is going to be resolved? Or are you saying that we're just too early and it's not going to happen until Greece has even worse problems in a year's time?
$64,000 question. I don't believe that euro will break down at this stage. I think you've still got the aspirants wanting to come in from Eastern Europe to join the euro party. But I think the restructuring that we need to go through will make it a very uncomfortable period for the next couple of years, but we will get through this, and potentially the eurozone will be stronger than it is today. But for those that are thinking of joining, perhaps they'll think about joining a little bit later than they were initially hoping. But no, I don't think the eurozone's going to break down.
No, we have seen this $1 trillion package has done anything. It has taken the pressure off the speculation on Greece, the worries about contagion spreading. Absolutely. Again, that hasn't gone away, has it? It's just been suppressed at the moment. It's
been suppressed for the time being, and the more that you see the reaction to the austerity packages that have been put through, so you've had the footage of Athens, etc. Yes. You've had the resilience from the Germans to their contribution. It's no easy solution. Yes, you can say we're going to give X amount to bail out Greece and avoid the contagion, but until you have full wide-bodied support across the EU members, it's not a done deal. So, that is what's causing all the problems so far. You've got the number, but you haven't necessarily got the coordination to back it.
Indeed. Now, we've seen the euro kind of rallying slightly today. 124 is not very exciting, is it? What do you see going forward with that? Is there a long way to go lower?
I think, I'm not a currency strategist, but I think there is probably further downside marginally. But people are sort of talking about getting into the 120. But at these sort of levels, it's already creating conditions for potential positive on the growth side in Germany. But I think the longer that the noise and the uncertainty continues, that will be reflected immediately in the currency markets and by a paralysation, if you want, of risk assets in the corporate bond space.
Indeed. Simon, thank you very much indeed for coming in and chatting to us.